Good morning everyone and welcome to another RF Crypto video. Today's markets have improved since the weekend by almost 3.5–4%, and the global crypto market cap is now standing at 1.3 trillion. However, compared to last week, this is flat out the same. When we spoke on Friday, it was about 1.29 trillion, 1.3 trillion, and the markets basically on a 4-day period haven't moved much. They have remained nearly constant. However, any improvement from the previous day is a good thing. Bitcoin has improved. It's gone up by 3.7%. Ethereum has gone up by almost 5%, which is fantastic. The whole market is basically green. It's reacting well. The fears of a meltdown are slowly simmering. We know that there's a monkeypox outbreak that caused the prices to dip a little bit. You know, when there's a new disease that's out there and there's a potential for it to spread and become a pandemic, then the markets react negatively. However, experts have said that monkeypox is not nearly as contagious as COVID, nor nearly as deadly as COVID. So people's fears can be put to rest, and therefore the markets were kind of relieved, and they thought, oh well, this isn't going to be another COVID, so let me just invest in riskier assets. And that's why a lot more money got poured into crypto over the weekend. Looking at the price of Bitcoin, it's quite interesting what's happening here, because if I zoom out, you can see that since the 10th of May, which is about 13 days ago, about 2 weeks ago, the markets have been trading laterally at this $30,000 level. And this is undeniable because we can see dips and increases following by dips and increases, but all of them come towards this $30,000 level. And this morning, the price of Bitcoin broke above this $30,000 resistance level, and the $30,000 now became the new support level, and the price is slowly inching towards this $31,500 resistance level. And if it can make it through there, it can break through it, hopefully, and go all the way up to 35,000. But that's wishful thinking. We thought the same thing here, we thought the same thing here and here. And what's most likely to happen based on past experiences is that it will rise for a little bit, and then the bears will get back into the market and the prices will fall below 30,000. So let's look at some positive news, right? Venture funding for African crypto startups grew by 11x in 2022. So it's 11 times what it was compared to last year. So blockchain startups were able to raise about $91 million within 2022's first quarter. And compared to the first quarter of 2021, it showed a 1,668% year-on-year increase in cash inflow compared to 2021's year-on-year of 149, which is an increase of more than 11 times. This is incredible. A lot more money is flowing into crypto projects in Africa, into blockchain projects in Africa, and this is fantastic news. Because while Africa has not seen a blockchain mega deal, this report highlights that it will within 2 to 3 years. Unicorns may emerge from the region's crypto and blockchain scene because more and more venture capital show interest in the region. And if we look at the breakdown here, what's surprising is that South Africa is the most well-developed economy in Africa. However, it's only seen 5 companies successfully raising capital. The most is actually Nigeria. There are a lot of crypto and blockchain entrepreneurs in Nigeria, and this shouldn't come as a surprise, but since South Africa has a lot of talent and it is the most well-developed economy in Africa with the best infrastructure, I would expect South Africa to have a lot more than 5 companies in its bag. However, Nigeria is leading, and this is fantastic news for the country and for its adoption of blockchain. And it's incredible because blockchain is now the biggest funding avenue in Africa, and it surpassed all other forms of startup funding. And one of the quotes were that we see this development as a key enabler for African enterprises, giving them rapid entry to markets by using blockchain as a catalyst to build new businesses. So basically, unpacking this, we know that in Africa, most people are unbanked. Over 80% of the population is unbanked in sub-Saharan Africa. That's a fact. Why they're unbanked is because there are certain limits or there are certain requirements that you need to meet before you can actually open a bank account or connect to the financial system, like have a certain amount of capital. And also there are a lot of fees that are incurred by people when they make transactions using banks or any other type of financial platforms in Africa. For example, if you want to transfer money from one person to another but they're banking in different banks, you usually incur a fee, which is not ideal because the informal traders, which makes up the majority of the economy in sub-Saharan Africa, they're already running at such tight margins. They're selling to survive. not even to make a massive profit. Therefore, they cannot afford these high fees, so they mostly deal in cash. So what blockchain will do, and what crypto will do, piggybacking from blockchain, is enable them to connect to the financial system, because all they need to open a wallet and to have crypto in their wallets and transact is a phone. This is all they need. And most people in sub-Saharan Africa, according to research, have a mobile phone, and they have a smartphone that has 3G and 4G capabilities. So this will enable these individuals, these entrepreneurs in the informal market, to create a wallet and trade in crypto. So if customers want to pay in a digital form, they can do so in crypto. Especially with all these layer 2 solutions coming out with low fees and high transaction speeds, if they can implement something like the Lightning Network, if I want to buy, let's say, 15 oranges in a market and I don't have cash, I want to pay with my wallet, I can just use my wallet, transfer, let's say, $2 to the vendor. They receive it in their wallet, incurring $0.00001 in fees, and there you go. That's a transaction done. That negligible fee is affordable to the vendor, is affordable to everyone in the informal sector. Therefore, I believe that it will cause a massive adoption of blockchain technology and of crypto as well. It's one way that the informal market can connect to the financial markets. And this brings up a lot of possibilities for development and also growth, and bringing people out of poverty, and new types of loans which are low interest. Microfinancing will evolve in a sense that it will allow financial institutions using crypto and blockchain to help the informal traders expand their businesses, purchase more products, and allow them to do whatever they want to do by issuing them capital at a very, very low interest cost. And this has already been starting. Because last month a report showed that the lack of financial service infrastructure in Nigeria boosted crypto ownership in the country. And this is the other side of it, right? Because if there is not enough financial service infrastructure, or there is a weak infrastructure, then crypto ownership will be boosted due to the fact that crypto and blockchain infrastructure is quite solid. The study also showed that citizens of the country began to use crypto as their alternative for storing and transferring assets. And as I said before, this is bound to happen once crypto and blockchain technology becomes widespread in Africa. And this is why they say that in 2 or 3 years, there are going to be unicorns in the continent, specifically sub-Saharan Africa. Layer 2 adoption could spur the next crypto turning point. It's already a fact that the industry is moving away from bridging between L1 blockchains towards L2s or layer 2s. And why they're moving away from bridging L1s or creating a bridge which connects different layer 1 solutions like, let's say, Ethereum and Solana, and you create a bridge to connect the two so they can interact, is because these bridges have a lot of security vulnerabilities. We have seen hacks in the hundreds of millions of dollars of lost assets that was routed through those bridges, and these bridges aren't safe at all. So instead of using bridges, companies are leaning more towards layer 2 solutions. So what a layer 2 solution does, basically, it takes advantage of the security of a layer 1 solution like Ethereum and alleviates traffic on it by rolling up a number of transactions into a single package to be settled at once. So let's say that you have 10 transactions in the Ethereum network and one transaction has a fee of $1. If you have 10 transactions, then you pay $1 for each transaction. That's $10 in fees for 10 transactions. And it takes a long time because of the congestions that obviously usually plagues layer 1 solutions. However, with a layer 2 solution, what they do is they take those 10 transactions, they bundle it up into one transaction, and then the layer 2 solution software sends those 10 transactions bundled as one transaction into the main layer 1 network as one single transaction. And it incurs a fee of $1 only because it's one transaction. And that saves a lot of money because now each transaction costs $0.1 instead of $1. And not only is it cheaper in terms of fees, but it's also quicker because it takes a lot less time to process one transaction rather than 10. And this is why layer 2 solutions are taking over and are becoming more popular. A good example of a layer 2 solution is the Lightning Network. So there are other layer 1 solutions such as Solana, which act like layer 2 solutions. They boast relatively cheap and fast transactions. And obviously they have gathered support from users because of its very low fees. Average Solana transaction is $0.0025, whereby an Ethereum transaction costs about $1.3 at the moment, which makes Solana a lot more attractive. Despite this wild disparity of fees, demand for Ethereum block space has remained overwhelmingly dominant, as it has $74 billion in TVL, outweighing Solana's $4.24 billion, and this is mainly because of Solana's reliability issues. Whenever there are a lot of transactions in the Solana network, it usually crashes, and the network becomes out of reach, and people cannot make transactions in that network, therefore making it super unreliable, and that's why people are still sticking to Ethereum. And that's why the Layer 2 solutions offer a fantastic way out for people who want Solana-like fast and cheap transactions, but Ethereum security. And I mean, several major decentralized apps have already deployed on L2s. For example, SushiSwap and yield aggregator Curve are already on Arbitrum, which at the moment is the largest Layer 2 solution in the Ethereum network, with almost $3 billion in total value locked. And the entire Ethereum Layer 2 ecosystem has a total value locked of almost $5 billion. So this means that Arbitrum has more than half of total value locked in the Ethereum L2 ecosystem. But these numbers are set for an explosion if the right forces conspire to draw users and capital away from other Layer 1s. So if the conditions are right and a lot more decentralized apps are developed in Layer 2 solutions such as Arbitrum, then this total value locked is going to explode maybe to 100 times. So this is an area that we have to look at very carefully due to its potential to be the next big narrative in crypto. On CZ, who is founder and CEO of Binance. So he said, investment-wise, I am not a good example. I don't diversify. I recommend most people to diversify, but for me, I am all in Binance. He's all in crypto on BNB and Bitcoin, and he uses his Binance card wherever he goes. So what my aim is by showing this article is that this man is able to put all of his money into Binance because it's his baby, he developed it. And the fact that he's a billionaire and he probably has a lot of cash sitting, so he can afford to make these risks. However, you and I, we have limited capital to spend in the markets. Therefore, we should diversify. It's the most important thing. We should diversify in crypto. We should invest in different types of cryptos. Not only that, but we should also invest in the stock market. We should also invest in bonds. We should also keep some in cash, in precious metals if you can. We need to do this so that we have security. There is no point in putting all your eggs in one basket, because if you put your eggs in different baskets, at least if one egg breaks, let's say your egg in the crypto market breaks, you had all your money in Luna and then it goes to zero, your egg broke. If all your eggs were in the Luna basket, then all your eggs would break. However, if you have eggs in different baskets, if your Luna egg breaks, you have other baskets that can save you and generate income and provide a cushion. So this is just what I'm trying to say. I'm a pretty risk-averse person, so that's my investment thesis. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.